All right, today we're going to care into a real corporate drama that all went down in a single earnings report. We're talking about Ag Growth International, or AGI. They build all that huge equipment for farms and grain storage. And let me tell you, they just went through an absolute crisis, and now they're trying to pull off a super high-stakes comeback. Okay, let's get right into it. So just imagine this for a second. You wake up, you check the stock, and over a third of your company's value is just gone. Poof. In one day. This isn't some hypothetical. This is exactly what AGI's investors were looking at. A drop like this catastrophic, it screams that something has gone deeply, deeply wrong inside the company. And this is where things get really weird. It's the central mystery of the whole story. How in the world does a company sell more products? I mean, revenue is up 4%, but somehow make way, way less money, with profits crashing 38%? This is the puzzle we've got to solve. Right, so to really get how they plan to come back from this, we first have to do a little autopsy on what went so horribly wrong in that one quarter. What exactly broke inside AGI? And listen, the new guy in charge, the interim CEO, Paul Brisebois, he was brutally honest about it. This quote right here points to the number one culprit. AGI was basically a victim of its own success down in Brazil. They were growing so fast, so aggressively, that they literally couldn't keep up. Their ability to actually manage the work just fell apart. Okay, now check this out, because this is where it gets really telling. The pain wasn't just in one spot. Take a look at these margins. That's basically their profit on each sale. For both their farm business and their commercial business, they completely collapsed. This tells you it wasn't just one bad project. No, this was a systemic breakdown happening across the entire company. So you see what happened? It wasn't just one thing. It was a complete perfect storm. You had Brazil, which was the big one, just getting hammered by cost overruns and bad debt. At the exact same time, their farm business up in Canada saw sales drop, which made their factories super inefficient. And then, to top it all off, their North American side was basically selling the wrong mix of products and not even making them efficiently. 3 huge, separate problems all hitting at once. Ouch. Okay, so they figured out what was broken. Now, the pivot. The company had to change, and fast. Let's get into the new playbook and see how they're trying to build a recovery. You know, every good comeback story has its hero, right? Well, for AGI, it's this guy, Paul Brisebois. He's not some outsider. He's a company veteran. He's been there for years, saw all the growth. And now, he's the one who has to fix the very machine that he helped build. No pressure. And his game plan? It sounds almost too simple, but it's really powerful. It boils down to just these 3 things. Number 1, simplify everything. Make the business easier to run. Number 2, get obsessed with the customer again. And number 3, probably the most important, get a death grip on cash and start paying down that debt. This isn't just corporate fluff, it's now the filter for every single decision they make. And look, this isn't just some mission statement they put on a poster. They started taking some tough medicine, like immediately, rolling out deep, structural, and frankly, painful changes. First thing they did, they took a scalpel to the very top. The executive team. Gutted. From 17 people all the way down to just 8. That's more than half. The idea is to make the company faster, less bureaucratic, and make it crystal clear who is responsible for what. And the immediate payoff from that move and others like it? A cool $20 million in savings year after year. That is cash that goes right back to fixing that profit mess we saw at the beginning. Oh, but they weren't done. Not even close. They found this massive company-wide IT project that was described as, and I quote, ineffective. So what did they do? They killed it. Just shut it down. And boom, that's another $20 million in cash saved. A huge move to stop throwing good money after bad. Okay, so they're slashing costs left and right. You know what every single investor is thinking right now, right? What about my dividend? And the answer, it's blunt. The dividend? Gone. Just suspended. This sends the clearest possible signal about how serious they are. Priority number 1, 2, and 3 is saving cash and fixing the company's finances. Period. But honestly, this next move, this might be the biggest one of them all. They are making a strategic retreat in Brazil. They've slammed the brakes on going after those huge complex projects, especially the ones where AGI had to put up its own money. They're basically saying, we're done with that game. It's back to basics. So you got to admit, the plan is bold. It's decisive. But A plan is just a piece of paper. Executing it is a whole different ballgame. And the road ahead for AGI, it is not going to be easy. So remember that big pullback in Brazil? Well, here's the price tag. That decision alone leaves a $183 million hole in their sales forecast. That is a massive amount of business they now have to go out and replace with smaller, safer deals. It's a huge mountain to climb. And all of this is happening while they're buried under a mountain of debt. That leverage ratio, 4.7 times, that's really high. It basically means their debt is almost 5 times what they earn in a year. So their immediate plan is to get about $80 to $100 million of cash in the door by, well, getting their customers to pay their bills faster. It's a crucial move to get just a little bit of breathing room. And I think this quote from the CEO really sums up where they are right now. It's not about promising a quick fix or an easy win. It's a statement that says, yeah, we know how tough this is going to be. We see the challenges, but we think we have the right team and the right plan to get it done. It's all about execution now. So when you boil it all down, this is the big question, isn't it? AGI is making a huge bet here. They are choosing slow, painful discipline over fast, flashy, and risky growth. And in a market that just loves expansion, that just loves a good growth story, you have to wonder, is this focused, tough love strategy actually going to pay off?